Abhishek Parikh, Group Head of Finance at Waaree Renewable Technologies, joins us right now on the show. Abhishek, good having you. Thank you so much for taking the time out. And at the outset, congratulations on a very good set of numbers. Is this something that you guys had penciled in at the start of the quarter and for the year as well? Is this something that you had penciled in, or has it turned out to be slightly better than what you had thought of?
First of all, thank you very much for having me on the show.
Sure.
Good morning. So, as you rightly said that at start of the year, when we were talking about our last year's performances, we have given a broad guidance that this year, since our order book was somewhere close to 2 odd gigawatt at start of this year, we were expecting the execution around 1.5 gigawatt odd worth of execution, and which we have. I'm very happy to share with you that we have actually completed the installations. And as we speak today, I'm very happy to share again that our order book stands strong at 3.2 gigawatt, which needs to be completed over next 12 to 15 months of time, which means by start of this year itself, we have a longer horizon in terms of execution capabilities as well as execution runway.
Okay. So Abhishek, okay, so before we get, okay, we'll come to the guidance as well in a moment. I would love to talk about that too. But as I look at the current order book that you have and the execution that you have, your operational metrics seem to be stabilizing at about 26.5% or in that range. Would you reckon that with the higher execution, you'll be able to maintain or improve upon the operational metrics and the margins? Or could there be challenges there considering that supply chains might be getting disrupted?
So, rightly pointed out again, I would rather say because at higher level of execution, when we move higher in terms of our execution year on year, our ability to deal with supply chain gets better off. So last year, when we did somewhere around 700 megawatt of execution in FY24 against 1.5 gigawatt worth of installations this year, we have seen the advantage of economies of scale coming to our favor. And we believe that this should continue with the further executions year on year.
Abhishek, very good morning to you. Tamanna here. Just trying to understand about your unexecuted order book, which has grown 38% year on year. And of course, that would be a function of the growth of the order book as well. But if you can give us some details on this, and do you expect this number to come down over time? Are you building capacity to, look at the flow of order book?
So order book, if you look at broadly, we have two set of customers. One is your large scale utility segment. Another is the C&I segment, which is broadly a rooftop market. And we consistently, work on both these segments. We also work some bit with the PSU segment, which accounts for 10-15% of our overall revenue. But we believe that the healthy mix of utility scale of projects along with C&I scale of projects should continue from here. As far as capacity building is concerned, when we started the year, we were looking at order book of around 2 odd gigawatts, which by end of this year we are almost at the completion stage. And we have worked a lot on our manpower, our execution capabilities, our design team, our construction team, our procurement team have significantly increased. So for an EPC company like us, the capacity building really means addition of talent and manpower, which we have been doing consistently. And we believe this should continue.
Yeah, and of course, and which is why we saw that a little bit of a hit in margins, because employee costs and talent costs need to go up. Just trying to understand if there's more to come on that front, and where do you pencil that in?
So employee cost and other costs have increased a little bit this year, but compared to the growth of revenue, which is around 80% plus, versus the incremental employee cost, which is roughly around 50 odd percent, we see the advantage and the flip of incremental revenue, coming to our favor, and we believe this should continue from here.
Got it. Abhishek, what is, so 3.2 gigs or 3.2 gigawatts of order book roughly currently, right? What is the execution timeline for the same? And is there a ballpark estimate of what's the kind of order inflow that could come in for the financial year 26?
So 3.2 gigawatt roughly in terms of revenue would at the run rate of 1.1 crore to 1.2 crore per gigawatt per megawatt would convert into somewhere around 3,500 to 4,000 crore worth of minimum revenue at this point in time. But as we move ahead, we also have a large pool of talent for the business development and sales team. And every quarter, we have been building our order book as well. Like last quarter itself, we have seen one of the biggest orders coming up. And especially in the second half of this year, we have seen our order book building as good as 2.5 gigawatt worth of order. Especially in that, I would again mention that we got a single largest order of 2 gigawatt at a single location, which probably is one of the largest order by any solar EPC company at this moment.
No, no, but
So we believe our team continue to work at ground level very hard and help us getting ordered the same way we have been getting until now.
no, no. Okay, so therefore, can I get some numbers? So okay, thank you for giving out the actual. What I meant was the 3.2 gigawatt execution, is it spread over 12 months, 18 months, 24 months? Is there a timeline for that?
Yeah, so the timeline for this order book is between 12 to 15 months of time.
12 to 15 months. Okay, yeah. Okay, that is one. And part two, is there some estimate of what's the kind of additional inflow that will come in FY26? I know you mentioned that you guys are trying hard. It may be difficult, but there will be some ballpark estimate that you have about the kind of order inflows that will come in. 1.1 gigawatt, 1.2 gigawatt, 1.5 gigawatt. What's the number?
So I may not be able to give you any forward-looking number, but what I can help you with is our current order pipeline, the total bidding pipeline, which we call for our EPC revenue, is around 30 odd gigawatts. Which last year was somewhere around 20 odd gigawatts. So at 30 gigawatt of order book, we believe we have a reasonable pie to look at, because we have been consistently maintaining our market share also. And year on year, our pipeline increases, and we have seen the impact coming into our order book as well. So difficult to give an exact number, but I can tell you our order pipeline and our overall bidding pipeline has increased significantly in last 12 odd months.
Mr. Parekh, just trying to understand, what is your export contribution to revenue and what is your exposure? Just trying to get a sense of what is your exposure to the global tariff situation right now?
So as of now, we are pretty focusing on domestic market. In fact, I would rather say roughly around 100% would be contributed by domestic market alone. And we remain watchful of global situation and geopolitics which is happening around. But we also keep hunting out any opportunity which comes our way, be in India, be it outside of India.
So in terms of imports or costs going up of imports, is that a concern for key components?
So year on year, we have been focusing on localization of our entire supply chain. And if you look at our import numbers, we have seen a consistent decline in the overall import that we do. Because we believe that to look at larger execution, India as a market itself in next 5 years is expected to install at least 180 to 200 gigawatt of solar by 2030 as per government's target. Currently, we are standing at around 110 odd gigawatt worth of solar installations already done, and we have runway of around 170 to 180 gigawatt of additional solar power. And this much of scale you cannot achieve basis the import dependence, and we have been consistently working on domestic procurement only. Okay. And we believe that this should continue.
What is the extent of localization right now in your supply chain, and what is the extent of imports?
I would rather say around 90% would be domestic overall
okay.
supply chain.
But are there key components being imported and from China, etc.? Just kind of trying to get a sense of the exposure or the concerns there.
So first thing that we did last year was, because we foresee many things which were already around the geopolitics. So we focused first on getting localization of our key components, which included solar panels, which included other equipment like inverters, transformers, and all of that. So fortunately, we are in a very safe zone, I would rather say, as far as imports are concerned.
Got it. Abhishek, one final question, and that is on the O&M market. Now, a lot of wind energy EPC players are choosing to bid only for contracts wherein they also get an O&M attached to it. You may or may not be doing that, but I wonder what's the strategy ahead to expand the O&M market for yourself from where it is right now, and is that margin accretive?
Certainly. In fact, our current execution of O&M is around 680 megawatt worth of O&M that we do. But in our existing order book also, we have an optionality that we can also bid for the O&M of these projects. So line 3 gigawatt of current order book of EPC would also give us an opportunity to look at the similar amount of O&M opportunities as well. And this is an annuity business. So if you get an order of, let's say, O&M for a solar power project, the contract ranges from at least 5 years to 10 years of all kind of horizon. And that's why it's always I would say icing on the cherry or the icing.
For sure. So is there, so independent of your own thing, are you also doing third-party O&M on products, on projects that you've not executed? And what's the size of O&M for you right now versus what you target it to be? That's essentially my key question.
So yes, we are very focused. In fact, we have also tried to get an internal specialized team for our O&M segment. If you see our O&M numbers last year versus this year, we have seen around 30 to 40% growth in the O&M revenue. But key here is the larger the EPC execution order pipeline, the larger is opportunity for O&M. So we would really want to get the maximum share in the existing 3 gigawatt of order book to get this converted into O&M order book also.
All right. Thank you so much, Abhishek, for speaking with us.